back in that bag again. Whoa, whoa.
So, you sent over some info about changes to government pensions in India.
Yeah.
It's a lot to unpack.
It can be super confusing.
It can be, like assembling furniture without instructions.
Uh-huh. Yeah, exactly.
So we're diving deep today
Yes, we are.
into the Unified Pension Scheme,
That's right, the UPS.
the UPS in India,
Yeah.
which kicks in April 1st, 2025.
Yep, April 1st, 2025.
We have an explainer here which goes through all the details.
It does. Background, concerns, the whole 9 yards.
And today we're going to try to cut through the noise.
Yeah, cut to the chase.
Ah.
Get to the heart of it,
Exactly. No getting bogged down in jargon. So
Yeah.
first,
Right.
why was this change made?
Okay, so.
What does the scheme actually involve?
Uh-huh.
How does it stack up against the old systems?
Okay.
And what might the impact be?
Big questions.
Yeah, big. And we want those aha moments for you.
Of course.
Right.
Without the headache.
Yeah, like clear understanding without the maze of technical details.
Exactly.
So, okay,
Right.
to really get why this new scheme is here,
Yeah.
we need to look back a bit.
Okay, so back to the pension landscape.
Yeah,
That-
the old pension scheme,
The OPS.
the OPS. So this was for government workers
Right.
appointed before January 1st, 2004.
Uh-huh.
What defined this system?
Okay, so the OPS was what we call a defined benefit scheme.
Yeah.
So basically,
Okay.
your pension was predictable, linked directly to what you earned
I see.
right before retiring.
Mm.
50% of your last drawn salary, plus
Okay.
dearness allowance
Yeah.
to cover inflation. And importantly,
Yeah.
the government funded the whole pension payout,
Wow.
plus contributions to the General Provident Fund, or GPF.
Okay.
Those had guaranteed returns. So for the employee, it felt really secure.
Makes sense. Secure and predictable. Then came the National Pension System.
That's right, the NPS. On January 1st, 2004.
Okay.
Who was that initially for?
Yeah. Who is the NPS for?
So at first it was mandatory for all new central government staff who joined after or on January 1st, 2004.
Uh-huh.
It was optional for state governments.
Okay.
Most states did adopt it,
Right.
with a few exceptions, like West Bengal
Uh-huh.
and Tamil Nadu.
Okay.
More recently, though, some states,
All right.
like Rajasthan, Chhattisgarh, Jharkhand, Punjab, and Himachal Pradesh, said they were going back to the OPS.
Interesting. So the NPS is quite different from the OPS.
Yes, very different. It's a defined contribution scheme.
Okay. So what does defined contribution mean for the employee?
So basically, both the employee and the government put in a fixed amount.
Oh?
At the start, employees put in 10% of their basic pay and dearness allowance.
Okay.
And the government matched that contribution.
Right.
But there's no guaranteed pension amount.
Oh, I see. So
The final pension depends on a few things. How much is contributed over time?
yeah.
Your age when you joined, the investments you chose,
Right.
and crucially, the returns from those investments in the market.
So it's more tied to market performance.
Yeah.
Exactly. The NPS was also offered to workers in the unorganized sector, voluntarily.
Okay, so that was to broaden the pension cover.
Yeah, that was the idea.
So we went from the government shouldering the risk and guaranteeing the outcome
Mm-hmm.
to the individual carrying the risk and their pension depending on the market.
That's right.
That must have created uncertainty for people planning retirement.
Yeah, absolutely. Over time, there were definitely concerns about the NPS,
Right.
especially the lack of guaranteed returns.
Yeah.
The market goes up and down. So there's real uncertainty about how much you'll actually get.
It makes it hard to plan for the long term.
It does. Makes it a lot harder. And this led to more calls to go back to the OPS, the security of it.
The old pension scheme.
Yeah. And because of the pressure,
Mm-hmm.
the government set up a committee
Okay.
headed by Finance Secretary T.V. Samanathan to look into the whole OPS versus NPS situation.
And that leads us to the Unified Pension Scheme, the UPS. When will this new scheme be implemented? So the UPS has been approved. It starts April 1st, 2025.
April 1st, 2025.
Yep. For those retiring under the NPS since 2004.
Okay.
But this is important. They can choose to stay with the NPS if they want.
Oh, okay.
At first, it's just central government workers.
Right.
But states can adopt it too later on.
Okay, so what's the philosophy behind the UPS? What problem is it trying to solve?
Okay, so the main goal seems to be to offer some guaranteed pension income,
Okay.
but keep the employee and government contributions.
So contributions from both sides?
Yeah, it's being called the best of both worlds, OPS and NPS combined.
Okay.
But it's important to remember, the UPS is still a funded scheme.
So not a complete return to the old model?
No, it's not fully government funded like the OPS was.
Best of both worlds sounds good.
Yeah.
But let's get into specifics. What are the crucial features of the UPS?
Okay, so the big one is the assured pension. It's 50% of the average basic pay over the 12 months before retirement. But you need at least 25 years of service.
Okay, 25 years.
Yeah.
What if you've worked less than that?
If it's between 10 and 25 years,
Uh-huh.
then it's calculated proportionally based on how long you worked.
So that's the defined benefit element.
Right, similar to the OPS.
What else is important about the UPS?
Well, there's also an assured family pension. 60% of the employee's pension at their time of death.
That's a big difference from the NPS.
It is. This is crucial for families, for financial security.
Right.
It was a big worry with the NPS.
Right. What about a minimum pension?
Yes, there is. A safety net. 10,000 rupees a month if you've worked at least 10 years.
So that takes care of people with shorter careers.
Exactly. No one falls through the cracks.
Okay, what about inflation? You know, the cost of living going up over time.
Right, that's
Yeah.
important. So the assured pension, family pension,
Hmm?
and the minimum pension, they're all indexed to inflation.
Okay.
It's done through dearness relief,
Yeah.
linked to the All India Consumer Price Index for industrial workers, or AICPIIW, just like for current employees.
So the pension amounts are adjusted as prices rise.
Exactly. That's a major improvement over the NPS that didn't have that.
Right. That sounds like a big plus for long-term stability.
It is. It provides much-needed peace of mind.
Are there any other financial benefits in the UPS?
Yes. A lump sum payment when you retire. On top of gratuity.
Okay.
It's 1/10 of your monthly pay,
Right.
plus dearness allowance, at retirement, for every 6 months you worked. And this doesn't reduce your pension.
So it's an extra bit of support.
Exactly.
It sounds like the UPS is directly tackling the NPS issues.
It seems that way, yeah.
But to really understand the impact, we need to remember why the NPS came about in the first place.
Okay, yeah. Going back a bit.
What were the problems it aimed to solve?
Well, firstly, limited coverage of the OPS.
Okay.
The OPS was mostly just for government workers, which isn't many people, something like 12% of the workforce.
Right.
But the NPS, it wanted to include more people, like workers in the unorganized sector.
So a more inclusive system.
Exactly. And another big reason was the cost. The OPS was a huge burden on the government.
Financially.
Yeah. As salaries went up, so did pensions. And way back then, spending on union civil service pensions alone
Right.
was around 2.31% of India's GDP. That's in 2004, 2005. And the estimated pension debt was a massive 56% of GDP. A huge financial commitment. So shifting to the NPS was partly about shifting the risk from the government to the individual. But the UPS is like saying, okay, we get that people need security, but we still need contributions to manage the government side of things, even if it might cost more than the NPS.
That's a really big financial consideration. So managing the government's long-term finances was key for the NPS.
Definitely. There was also the burden on future generations. The OPS was pay as you go, meaning today's workers pay for yesterday's retirees. And with people living longer and maybe fewer workers in the future, there were worries about keeping this going.
Right. It's like a generational agreement.
Exactly.
Yeah.
Then there's the issue of early retirement. The OPS kind of discouraged it.
How so?
Well, your pension was fixed at 50% of your final salary, so people would wait till the very end to maximize it, instead of retiring early.
Interesting. So it impacted workforce management too.
Yeah. And there were other advantages to the NPS.
Okay, like what?
Flexibility. You could pick your own fund manager.
Yeah.
And choose investments.
Yeah.
Even a low-risk 100% government bond option. And you could get an annuity at retirement.
Huh.
And it was simpler and portable. You got a permanent retirement account number, or PRAN.
A PN.
Yeah.
Yeah.
It stayed with you your whole career, no matter where you worked. And it was a well-regulated scheme, with an NPS trust overseeing things, a bank managing the money, a custodian holding the securities, and you, the employee, owned it all.
So the NPS had clear goals, but it also had its problems, which led to the UPS. What were the main issues with the NPS?
Well, the biggest concern was how unpredictable market returns are.
Right.
Your savings were at the mercy of the market, and people were worried about getting less than the old guaranteed scheme.
That's understandable.
Yeah, like the Ukraine-Russia conflict.
Huh.
That hit the NPS pretty hard, and that kind of uncertainty is stressful.
It is, especially when you're planning your retirement. What other problems came up?
Well, the NPS put more financial pressure on workers,
Okay, how?
Under the OPS, the government paid everything. Employees didn't have to contribute, so they had more take-home pay each month.
Right.
But the NPS required 10% of your pay, and that hit people's wallets right away.
Even though it's for their future.
Exactly. And you didn't get GPF benefits with the NPS.
General Provident Fund.
Yeah, those guaranteed returns. And there was no guaranteed family pension either. Unlike the OPS, where it was right, with the NPS, it all depended on how much money you'd saved up.
So there were fewer safety nets.
Exactly. And the final big issue, no protection against inflation. Your pension just depended on the market and annuity rates. It could lose value over time.
So the UPS is trying to address all these problems.
That's what it looks like, yeah.
What's the overall significance of this new scheme?
Well, several things.
Okay.
First, it offers a guaranteed pension, like the OPS, which deals with the market uncertainty of the NPS. For people with at least 25 years of service, it's 50% of their last year's pay.
Right.
The government is also putting in more money.
Okay.
18.5% compared to the NPS is 14%.
So potentially a bigger pension pot in the long run?
Exactly. But there's a question. Doesn't this just shift the financial burden down the road? Maybe even make it worse if everyone switches to the UPS.
That's a valid point. It's
Yeah.
a balancing act.
It is. Then there's inflation indexation
Right.
for people with over 25 years of service, which, as we said, protects the pension's value over time. And the family pension, it's 60%, provides security for dependents. And overall, it's a hybrid model, combining guaranteed benefits with contributions, like a blend of the OPS and NPS.
So more security for government employees? But are there any concerns about the UPS?
Oh, yeah. There are definitely some concerns, mainly the financial burden on the government.
Okay.
Bringing back a defined pension, even partially, could really increase government spending.
In the long run.
Yeah. They're estimating just the first year's arrears could be around 800 crore rupees.
Wow. And how much in total?
Roughly 6,250 crore. A lot of money.
That's a lot. Could this lead to bigger problems down the line?
Well, some people are worried about the long-term costs.
Okay.
These guaranteed benefits might strain budgets in the future, meaning less money for other essential services if they have to cover pensions.
So balancing retirement security with responsible spending.
That's the challenge. There's also the question of fairness. The UPS, as it stands, it's mostly for central government workers. The NPS was supposed to be broader. Even the unorganized sector could join voluntarily.
Right.
But the UPS doesn't seem to have that. So is it creating a bigger gap between who has pension security and who doesn't?
That's an important point. What about the practical side of switching over?
Yeah, the transition from the NPS to the UPS, there are a lot of questions.
Like what?
What happens to people's NPS savings if they choose the UPS? And will the guaranteed benefits of the UPS make people less likely to join the NPS in the future?
So a lot to figure out. What needs to happen to make the UPS work, both for people and for the government's finances?
Okay, so several things are important. Regular checks on how financially sound the scheme is, maybe adjust contributions as needed, and talking to everyone involved, employees, unions, to get feedback and make changes.
Makes sense. Keep the conversation going.
Exactly. And having clear ways to measure if the UPS is actually working. Then make adjustments based on the data.
So basically constantly evaluating and adapting.
That's the key, yeah.
So to sum up, the Unified Pension Scheme is a big change for how government workers in India will get their pensions. It's trying to find that sweet spot between the stability of the old system and the contributions of the new one.
It's about finding balance. People need a reliable income in retirement.
Right.
But the government has to manage its resources.
Right. It's a tough act. And it makes you think, what other solutions are out there to ensure financial security for retirees without breaking the bank?
It's a question worth considering, for sure.
Definitely food for thought.
Yep.
Thanks for taking this deep dive with us.
Thanks for having me.
Of course.